Welcome back to the channel, investors. I got 3 banger stocks for you today. Now be warned, not all the companies I cover today pay a dividend. So I better not see anyone crying in the comments telling me,
"Oh my gosh, no dividend. I hate you. Dislike, unsub."
Now if we want to continue building that generational wealth, we're going to need growth stocks in our portfolio as well. It's all part of that well-balanced diet. Just like hitting that like button is part of that financial diet. 3 great stocks to consider coming up next. Stock number 1. What can Brown do for you? UPS. Brown can make us really wealthy, as United Parcel Service, or UPS, is the world's largest package delivery company, enabling global commerce. And dividend investors, you're gonna really like this company. Of the $25 billion in revenue they brought in this past quarter, that's broken out by $15 billion domestically, $5 billion internationally, and the rest of the revenue was through their supply chain solutions segment. UPS moves more than 23 million packages every day. As we continue to use e-commerce for all of our shopping needs, that's more money in UPS's pockets. And UPS is famous for being able to pass on costs related to fuel charges to its consumers. They actually have higher operating margins now than at any point in the past 10 years. I love the steady rise in revenue over the years. They went from $55 billion 10 years ago to $100 billion today. UPS also plans on repurchasing $3 billion worth of shares this year. Now, over the past 12 years, the amount of shares outstanding has actually remained pretty stagnant, meaning the company isn't diluting existing shareholders. It doesn't matter which player will actually dominate e-commerce. Whether it's Amazon, Target, Walmart, they can't deliver all of their orders by themselves. They will be using logistics companies like UPS. They benefit from small business and business to consumer / business shipping needs. Now, I told you this stock is a dividend investor's dream. You get a starting dividend yield of over 3%, yet UPS only has a payout ratio of around 40%. This company has raised their dividend for the past 12 years. Now, they didn't raise their dividend during the 2009 recession, but they also didn't cut it either, meaning they've been paying dividends every quarter for decades. Now, I personally don't own any shares of UPS just yet, but with all the research I've been doing, it has me seriously considering adding them to my portfolio. It seems like a company that is continuing to grow year in and year out, and they're paying big dividends. Stock number 2, the most evil company in the world, Amazon. While certain YouTubers have ruined all meaning of the phrase most evil company in the world, Amazon certainly adds some benefits to society, such as making you rich if you're an investor of their stock. Amazon shares jumped 13% after the company announced better than expected earnings, bringing in $121 billion in one quarter versus the $119 billion that was expected. The company continues to face challenges such as inflation, fuel and energy, transportation costs, and now they actually have too many workers and too much warehouse capacity after expanding too aggressively during the pandemic. But in typical Amazon fashion, they let go of 100,000 employees in the past quarter since they no longer had a use for them. That's a huge shock to me because Amazon is known for treating their employees so well. Now, I'm still bullish on Amazon because of AWS, Amazon Web Services. This is the company's cloud computing business, and it's a really high margin segment that just continues to grow. Amazon Web Service could really be its own company if it wanted to. It's up 33% year over year, now up to $20 billion in revenues. Amazon Web Services now accounts for 2/3 of the total operating income of Amazon. Of course, Amazon has many other ways to make money, including their giant online commerce website. They have physical stores, they get a commission from all the third-party sellers, they have subscription services, among others. Amazon just acquired iRobot for $1.7 billion. These self-cleaning robots can make a map of your home. As if Amazon needed any more information about your home than it already has. Now, Amazon stock may have been stagnant these past 2 years, but they're still up 190% in the past 5 years. And while they might not pay a dividend just yet, the recent stock split actually makes it realistic to own 100 shares of Amazon and to do covered calls. Amazon is nearly 3% of my investing portfolio. Stock number 3, losing patent protection, AbbVie. AbbVie is a large pharmaceutical company that just reported earnings that underwhelmed the market. AbbVie's biggest moneymaker, Humira, will start seeing biosimilars when their patent expires by early 2023. AbbVie has made nearly $200 billion from this monopoly that they've had over the past 2 decades, but that time is quickly coming to an end. Luckily, AbbVie has many more medications in their arsenal, with Skyrizi and Rinvoq expected to bring in nearly $15 billion annually by 2025. These 2 drugs this past quarter grew 85% and 56% year over year, respectively. AbbVie can also continue to acquire other companies like they did in 2020 when they acquired Allergan, picking up the popular fillers like Botox. AbbVie also blames some of their declining sales in their aesthetics portfolio due to C-19 restrictions in China, and also because they suspended operations in Russia. But this really doesn't seem to have scared off any analyst. Most just lowered their price target but still have this company as a buy. Its consensus price target of $161 means there's 16% upside from today's prices. Did I also mention AbbVie has an amazing starting yield of 4%? And they've also raised their dividend each of the last 50 years, dating back to when they were part of Abbott. Even with the most recent slump in share price they've had after earnings, they're still up 21% year to date, and they're up almost 100% in the last 5 years, not including that juicy dividend. But they have high growth, they have high dividends, and I'm sure the good folks at AbbVie will continue to research and develop life-saving products. Now, I currently own 13 shares of AbbVie and get paid $73 every year for just being a long-term shareholder. Alright guys, that's 3 bangers that have had impressive growth in the past, and I don't really see any signs of them slowing down. And they should also continue to make us rich in the future. Now these videos, they do take a lot of time for me to research and edit. All I ask is you hit that like button so the YouTube algorithm actually shows it to more potential stock market fans, and make sure you're subscribed because you don't want to miss any updates. As always, my videos are found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.